Welcome to Cattle Call, a project of the Nebraska Rural Radio Association. I'm Chad Moyer. Cattle Call is brought to you by Wolf Auto, small town strong. And once again, we're joined by Brad Kooima from Kooima and Varilek. They're in Sioux Center, Iowa. Brad, we've got some interesting things to talk about on today's program. Before we talk about the chaos that is happening today, just quickly, some thoughts about last week's trade and kind of where we ended last week. What did you make of where the futures ended and how that related to cash last week?
Well, thanks. I'll give it my best shot. I'll have to admit this is not your normal type of a day here, Chad, but it's fun to talk about in the heat of the moment. I'm afraid that's what we do here, when the markets are like this anyway. So thanks for having me on, Chad, and let's give it a little bit of a roll. So last week, to back up a little bit as to your question, we continue to see some deterioration of the cash cattle market. As the futures break, that usually incentivizes some to sell cattle a little easier than they might have. The cash cattle was lower, not because we had an oversupply of cattle, but rather because of this lack of confidence in the market. Uncertainty breeds that sort of thing. And that's what we saw in the futures market for sure. And of course, I'm talking about the uncertainty surrounding about tariffs, what's next on tariffs, what if tariffs would escalate to a point where we're worried about creating inflation here in the United States, which might trigger a recession. We certainly saw a huge sell-off in the stock market and all that stuff. We went basically from us selling cattle on Wednesday at 212 to Friday at 210 to this morning before the big turnaround. Cattle were trading at 208 in your state and mine in Nebraska and Iowa. Cattle were trading as poorly as 204 in Kansas. So to give it a little backdrop, that's coming off of 215-ish for a high, give or take. So we've had while still great prices, we've had a decent setback off of the cash highs, off of that turbulence that we're experiencing here in the macro marketplace for sure.
Yeah. We had a question based on last week's program, and it had to do with imports of cattle and how that might affect trade, not only of cattle in, but product out, especially as it relates to USMCA. We talked about how that was going to be kind of held back a little bit. What do you make of, the questions right there on the screen? What do you make of that relationship and what could happen during this whole tariff discussion, Brad?
It's a good question. I appreciate. I apologize a little bit. I'd done a little more prepping for what the numbers were this morning because the exports do come out on Wednesday morning, weekly exports. But my comment was relative to a question about what happens if we change the tariff environment with our North American neighbors, Canada and Mexico, because I mentioned that basically, unfortunately for our neighbors to the north, since mad cow disease, which was a long time ago, they really never got their infrastructure rebuilt in terms of being able to process cattle. There's one major packer, there's a couple of other smaller ones, but we do absorb quite a few cattle. And I know I mentioned that average last year was something like 14,000 slaughter cattle, fed cattle a week. Now, I'll come close with my guess, but don't hold me to it. We sell them meat for sure, right? And a tendency to sell them maybe the more higher end middle meats, which you'd call steak type stuff. So if you would look at it in dollar value, I'm not sure if we would quite match up to what we take in. If you looked at it in terms of pounds per week average, it would be slightly less than the pounds per week or the number of cattle that we take in. But if the listener is wondering about, do we have a relationship with Canada? Well, we certainly do. In terms of beef, we have a better relationship there than we do with the dairy items, of course, which are heavily tariffed going in that direction. So a kind of a C- answer to your question, but we certainly do sell some stuff back, not quite, in my opinion anyway, not quite to the degree that we take it in from them.
All right. Very good. Well, let's talk about what's going on today. Again, kind of the heat of the moment. It happens to be Wednesday, middle of the week when we're recording this while trade is going on. But we did see a drastic change in the futures today and even attitude out in the cash market. Kind of describe what has happened here today based, again, on these tariff discussions.
It's 100% about what's going on outside of the cattle specific environment, Chad. Well said. And if anybody thinks that I know anything about cattle, I mean, I'll let you down because I'm not perfect in that market by any means. But if somebody thinks I'm a global economist, you're even farther off. Okay. So, sitting here, I think anybody that's a cattle feeder and stuff has some of the same frustration, maybe not quite as high as I do, because we're getting twisted and torn and whatever the wind is blowing lately on the latest tariff news. And it's so subject to change, where one thing is said one day and then 24 hours later, there's something else said. But yes, there was a mic drop. Okay. To go back to a couple of Super Bowls ago, about 35 minutes ago, there was an announcement. It was on his Twitter feed even. So I think it's legitimate. Twitter or President Trump said that he would start a 90-day hold on all tariffs with one exception, and that's China. He actually raised the amount of tariff that he's going to charge to 125% with China, but everybody else, according to him at least, is making movement toward trying to reconcile, trying to get along, trying to have a much more fair trade environment. And so he's saying he's rewarding that for a 90-day hold as they further negotiate with every country with the exception of China. So clearly the macro stuff like that a lot. S&P futures stock market has changed, a ton. And the cattle market followed right along with it. We went from cattle were trading anywhere from 30 to $1 lower to we're just ringing the bell here right now, literally while we're talking, where the June cattle are up just a hair over $5. Some of the feeder cattle months are up over $7. Okay, that's a lot. That's a $12.50 trading range today on feeder cattle from low to high.
Yeah,
and it's strictly chasing the news. Absolutely.
Yeah. So the question is, what does that do to cattle in the country? Because like you said, we had some trade earlier in the week already. Yesterday in Iowa, Nebraska, some in Kansas. I think they were at least going to try and do some here today. But what does that do to the cash cattle market then?
Well, I can give you my own personal interest story because I sold cattle this morning at 208 in Nebraska. And I think that, dealing with the given fundamentals. But now if you hear this loud crashing noise in the background, it's the gates getting slammed shut. I can guarantee you that these feedlots are going to have more resolve now, whether you're a hedger or not. But this kind of price action is going to, I think the feedlot's going to bow their neck and say, no, let's get back to see what we're like before this last round of news watch, which is more like that 212 area. So I would expect the asking prices will hike here this afternoon, and we'll see what's the Packers willing to chase that just that quickly or not, Chad. But what a turnaround. This is, and finally higher. I mean, I have a saying in here, and I'm sorry to beat up your question here, but the cattle thing, every day when you go home, there's a chance that there's news that can come out to make you go down the limit or sharply lower. Every day. It seems like that's how vulnerable you feel when you're a cattle trader. And I believe it's the truth. Conversely, almost never do you ever go home thinking, well, boy, I'm really nervous. There could be some super bullish news, that would all of a sudden change it. Well, we had that exception today. That 90-day pause on the tariffs spun this market around on a dime. It's hallelujah. I'm glad to see it.
Yeah. And I was, you talk about those things, you go home at night wondering what's going to happen, because I think it was on Friday, because of some of those limit moves down, that they weren't even going to do an LRP quote at the end of the day. So it's just, it might be frustrating, but this is the market trying to figure out fair value, right?
No place for the faint of heart. You're absolutely right. On top of that LRP thing, and we offer that product here too, but they've raised the margins now for cattle 3 times in the last 5 days, which is a reflection of volatility. It always frustrates me that they're so quick to do that because it just creates more liquidation from somebody that's already got a margin call. Now they just made it even worse. But the guys that are long got a big reprieve today. Fun to see it. It's fun to see the market react to what should be good news. And frankly, Chad, this was not a cattle thing. This was an outside market thing. And so I'm really happy that maybe by next Wednesday I'll talk about what average weights are and what the box beef is, and we'll go back to really cattle fundamentals. I doubt it. I got a feeling we're going to be still talking about this stuff.
Yeah, absolutely. Well, Brad, thank you so much for the time. Again, Brad Kooima from Kooima and Varilek there in Sioux Center, Iowa. And if you have a question or a comment or something like that, make sure you submit that below, and we'll pick one and maybe hit on that during next week's Cattle Call as well. Cattle Call is brought to you by Wolf Auto, Small Town Strong. Thanks for joining us on this edition of Cattle Call. I'm Chad Moyer.